Hello, good afternoon, everyone. Welcome to the SBG webinar. Today, the topic will be on challenges in the fourth wave of COVID-19, business resilience and tax concern. And the objective of this webinar aims to give a general review of the tax environment and share about the tax development in the context of COVID-19. Here you can see the webinar agenda. It will take about 1.5 hours. Okay, let me introduce you about SBG, Singapore Business Group. SBG is a non-profit organization established in 1992, 9 of August, by a small group of Singaporeans doing business or working in Vietnam. Since then, it has evolved from a social club with a membership of 30 individuals into a premium business group with a membership strength of more than 350 and is growing every year. Our vision is to be a caring, cohesive, and a reputable premium business group in Vietnam. Our mission is to actively foster business relations with other business communities whilst promoting social, cultural, recreational, educational, and charitable activities in Vietnam. And I would like to welcome Mr. Lam and introduce our speaker today. Mr. Lam has nearly 30 years of experience working with multinational corporations and Vietnam clients in all business sectors. He is specialized in providing clients inbound investment, M&A, advisory, local tax advice, custom duty review, and other compliance issues relating to inbound investment. Prior joining RSM Vietnam, the last 18 years, Mr. Lam has been with one of the big four in Vietnam, Malaysia, and Australia for 12 years, and advising many MNC on their investment structuring and strategy, foreign investment regulation, international and local planning and compliance in various industry and other sectors. Mr. Lam is currently in charge of RSM Vietnam Tax and Consulting practice, providing local tax and custom compliance, outsourcing and advisory service to foreign investors entering into operating Vietnam. Today we have 6 co-hosting chambers. They are AmCham, KenCham, Hong Kong Business Association, InCham, MBC, and Thai Business Association. So I will pass the next to Mr. Lam for this webinar. Thank you.
Thank you. Thank you, Kevin, for introduction. Good afternoon, everyone. My topic this afternoon, you know that this month I conducted 7 webinars. That is one of the months that I hit the record in my life. So the topic this afternoon for this webinar will be the challenges in the fourth wave of COVID-19. When we talk about that, I think some country they already mentioned about the 5th wave. So we will have some briefing about what's happening in Vietnam and Asian country about COVID-19. I will have a section about business resilience, and after that, I will come back to my expertise tax update. So as I just mentioned, we have 3 parts in my presentation with briefing, business resilience, tax concern, and we have about 15-20 minutes Q&A at the end of my presentation. So let's start with part A. Okay, I have few slides put and you know that I getting some updated information and putting in my presentation the comparison table and charts about what happening among Asian countries. You can see that the figure I got the figure updated on this Tuesday. Of course, from Tuesday up to Friday, the numbers still keep increasing. So let's see what happened on this 2 days. You see that in Indonesia, they have among 30 to 40,000 cases per day. Then Vietnam, earlier this week, they have about 4,000 or 5,000, but the last 2 days, they have more than 6,000 new cases per day. Then Thailand, you can see that about 12,000 new cases per day. Malaysia also around 11 cases per day. Singapore, I don't have the latest figure today, but on these 2 days, still okay. There are no new cases in 1 day, but I know that in Singapore, yesterday, Singapore already started the semi-lockdown from yesterday. So let's take a look on the total deaths. Indonesia, 74,000 deaths. Vietnam, only around 300 deaths at this moment. Thailand, more than 3,000. Malaysia, 7,000. Singapore, up to now, only 36 death cases. The next column, you can see that the total cases from last year up to now per 1 million population. So in Asian countries, Indonesia, I think now in keeping the #1 position about the total cases per 1 million population. Then Malaysia is second one. Then you can see that, or Singapore, because last year, I think Singapore and Vietnam quite similar. It's about 63,000 cases. So divided to the population, then Singapore also have the total cases per 1 million population high. On the right side, you can see that the blue columns is the new case within 1 day updated during this Tuesday. The green color is the new deaths. And you see that the situation in Indonesia is not good at this moment. Vietnam, new cases increasing, but new deaths still under control. You can see that the gray one, the check with the gray one, the total cases per million population, Vietnam still okay. You know that if you read the newspaper just before this webinar in Ho Chi Minh City, the government will apply the Directive 16 plus today. They will ban more activity and extending the lockdown periods for two more weeks. So we will see what happened in next couple of days. I have one more slide briefing you about the vaccination. So you can see that the vaccination in Indonesia, they already have the number of people got the full vaccination, two doses is 16 million people, but the percentage, because the population has a percentage only 6%. Philippines, they already have more than 4 million people have getting two doses, and percentage 4%. Vietnam at this moment, I think one doses, they already have more than 3 million, but two doses only more than 300,000 people, so 0.3%. Malaysia, you see that more than 4.5 million getting two doses, and the percentage fully vaccinated is 14.5%. Cambodia is too high because the population low. Singapore, the figure updated until this Tuesday, 2.6, and because the population low and percentage high. So you can see in the chart on the right side, the green column is the number of people in Indonesia have more than 16 million people getting two doses, and the red color is percentage of population. Singapore in the good shape because 47%. I think now probably very close to 50% now. Vietnam still have a far way to go. Then you can see what's happening at least in Asian country. I go to the Worldometer website before this webinar. I see yesterday quite a number of countries, they have the new cases increasing significantly. So I think probably in the next month, we can talk about the fifth wave of COVID-19. So this slide I also give you the update of the vaccination plan in the Asian country. Indonesia, they aim to have 70% population to get the full vaccination, two doses. By the end of this year, Philippines also expecting to have 50% population getting two doses by the end of this year. Vietnam, I read the newspaper, they already importing 8 million doses from, I think more than 8 million, only from AstraZeneca, they already imported 8,000 doses up to now. and they're starting to do the vaccination this week and next week. But because the population high in Vietnam think that they can have 75% population getting 2 doses by the first quarter of next year. Thailand, they also think that at least 100, they think that they will do the 100 million doses and getting 70% population getting 2 doses by the end of this year. Malaysia also expecting similarity by the end of this year. Singapore think that 67% population getting the 2 doses by the end of this August or later during this October. So country have a strong plan to do that. In reality, whether people agree to do or the speed of work can go as what expected by the government here, and another issue. What would if, let's say, if all of the country in Asian manage the vaccination plan like that, then we can see the brighter situation either by the end of this year or early next year. So I have 2 slides sharing with you about the global economic forecast during this year, next year. So global GDP growth rate is projected to be 5.6 this year and 4.3 next year. The reason of the GDP growth rate this year is high because last year the GDP growth rate almost negative. So this year when they get recover and they increase this, the total movement make the growth rate this year look high. It's high just because the last year thing it goes so badly. For the developed countries, it's expected that the GDP growth rate this year will be 5.4% and 4% for next year. For the emerging markets and developing economies, the GDP focus for this year will be 6%. And because you know that by a number of EMDE countries, they have the strong growth rate because the starting point is low. So this year they expected 6% and 4.5% for next year. That's the focus from World Bank in last month. So let's move to the next slide about what is the Vietnam economy's situation. You see that the Vietnam this year growth forecast before June and July. Early this year, number of international organizations expect that Vietnam will grow fast. You know that because last year GDP growth in Vietnam close to 3%, 2.9%, and China, Vietnam, and Taiwan last year is the 3 countries in Asia and probably one of the few countries in the world they have very good growth rate. So you see that early this year, IDB think that GDP in Vietnam this year about 6.1%. Standard Chartered forecast GDP in Vietnam about 7.8. World Bank think that Vietnam will achieve 6.8% this year. Ministry of Planning and Investment, they think that Vietnam can achieve 6.2. So with this, the news cases increasing in June, quite a number of international organizations adjusted their focus on Vietnam GDP growth. You can see that ADB think that Vietnam can grow high. From December, they think 6.1. In May, they think that 6.7. Standard Chartered think that Vietnam will, the GDP growth will be reduced from 7.8 to 6.7. World Bank, they think that GDP growth from 6.8 to 6.5. Ministry of Planning and Investment think that from 6.2, they think that this year GDP growth is only 5.8. And it will be interesting to see after this month, after July, and probably early next month, probably there will be some adjusted figure again from how Vietnam can grow for this year. So I just finished my Part A, briefing you some figure about COVID-19. And talking about the four ways, and you can see that now the fifth way appear, that get clearer in the number of countries. So let's move to part P, business resilience under the COVID challenges. For this part, I want to give you the some survey from McKinsey and Company in March. They did a survey with 300 senior executives in Europe to ask them how they feel about their responses in COVID-19, and the survey showed that 50% of them reported that the crisis exposed more weaknesses in their strategic resilience. So quite a number of 50% of respondents think that the business model, competitive position have not proved the resistance, the ability to react with the description during the COVID-19. 75%, I move to the middle column, 75% of respondents think that the business model innovation will be very important issue now. And most of innovation now, they focus on customer experience. People think about new product, new customer experience improvement. The last column, the survey also showed that 60% of respondents think that the innovation need to be continued after the COVID-19. That after the world can control the COVID-19, you see that people think that the innovation now very important, and during this time, people also can see the new opportunity, new way of doing the business, and they need to do that. They need to implement that after the post-pandemic. In that survey, when talking about the new business model, the executives, senior executives also focused on 5 areas. The first area in new digital experience, product and services to respond to the changes in the customer behaviors and their needs. The second area is the new partnership within and outside the industry. The example that the sport club now need to partner with software company to do the virtual experience. The third area is the supply chain and model adjustment to secure the alternative resources to balance the needs of just-in-time delivery and the protection again delay. The fourth area to be focused is sales model changes to respond to the remote and the new requirement of the digital model. And the last area to be focused is faster product development, because you know that now many business doing the new way, so you need to change to meet the customer needs and the new behaviors. So I also want to share a summary of the short-term and long-term action plan during that time. And you can see that for the short-term action plan, people need to react with the surge of the COVID-19 increasing. So the short-term action shall be holding cash as much as possible, cutting overhead, putting people on furlough, on leave, some we call the work suspend, so there are a number of alternatives to do with your people, taking advantages of government support. I will mention about that during the end of my slide, and also take advantages from the creditor goodwill. Talking about the long-term plan to be resilient with the new situation. So you need to do reassessing your business model and competitive position. You also need to adapt the new situation and getting ready for the next stages of the business transformation. You can see that from May, we start talking about the fourth wave of COVID-19 and only 2 months time. Now we need to move to talking about the fifth wave of COVID-19 at this moment. So things will change fast, and you can see that with the lockdown requirement, the situation up and down like that. The new digital AI is the thing that cannot be avoided in the short period of time. Okay, I have 2 more slides sharing with you about the recommended action from RSM we suggested. We had an article suggesting 6 steps to get ready for the new statute in Vietnam Investment Review this month. So I just want to lead down the 6 steps we wrote in this article. So the first step, we suggested that people need to plan well. You need to look at the number and data to see where we are going to be in the next 12 or 18 months. What could be the way forward? You also need to forecast your future. You build a forecast projection. You work with your auditor, consultant to develop the various scenarios to deal with the uncertainties. One of the suggested steps is to engage with the right stakeholder. Now you need to work and find, maybe you work closely with the current one or find a new one. You need to engage with the financial stakeholder. You need to work with the bank, investor, funder, your advisor to make sure that the transparency and get the support when implementing the new business model or adjusted business model. We also need to think differently, because you know that experience from last year and this year teaching us that the lockdown may not be ended so quickly. People just think that we only have 2 weeks and probably 4 weeks for quarantine, but situation may be worse than that. We may have maybe 3 months, 6 months, well, 1 year up and down. So we need to think differently, think ahead, think about a new approach from the different perspective and explore multi-opportunity. Okay, one of another recommended steps is adapt and be flexible. So you need to actively monitor your business, financial model, be open to, you know, that using the different approaches where necessary, because some traditional, some old experience may be not working well in the new situation. And the last step recommended by us, we all need to be prepared for unexpected situation. So think about creating more room, more headroom in your facility when you're working with the bank, when you prepare your own budget to enable you to cope with unexpected, whether it's good or bad. Good, if it's good, that's great. But if, let's say, it's not good like what we expect, then we can be have quick action to adopt with the new thing. So now I move to key part in my presentation. That's the tax concern. So I have 2 sub parts in this part. The first one, I give you 3 major suggestions about how to well prepare for the tax changes this year. And the next part, I will provide some tax updates. Okay, let's move to the first part, how to well prepare for the 2021. We have 3 suggestions. The first one is determine how the tax changes affect your business model. The second suggestion that as we suggest you keep up with the common tax changes and do a tax planning ahead. And the third one, be ready for the tax audits. So we move to the first suggestion for the well preparation for this year. So determines how tax changes affect your business. You need to identify the affected area and the tax risk as soon as possible. You know that this year there will be quite a number of changes on the tax treatment when a company make a payment to business individual. I will mention about that in the next couple of slides. There are also some new requirement on the tax treatment if you have the distribution channel to the business household and business individual. If your entity have independent dependent branches, then the tax allocation, tax calculation this year, next year also have some changes, and you need to be aware of. Next year, you know that most of the e-invoice we are using now follow the old regulation, but remember that next year, 1st July next year, all of the e-invoice need to follow the new regulation next year. So you may need to starting to study about new requirement of e-invoice now, and doing some revision of e-invoice implementation starting from this year. Okay, the second suggestion for tax is keep up with the common tax changes and plan ahead. You know that there will be a lot of tax changes this year. If you attended the previous seminar, webinar from consulting firm, you know that Ministry of Finance erupting quite a number of circular and they will be released this year. So we keep up with the you need to follow up the tax authority proposal on tax policy. You know that this Sunday I also attended a webinar to brief people about the global minimum corporate tax that G7, G20, and US discussed in Italy this month. And if everything goes smoothly, then the requirement of global minimum corporate tax will be applied next year and take effective in quite a number of countries in the year after. I mean that next year most of big countries will agree to introduce the concept of corporate minimum corporate tax in their domestic law, and the effectiveness will starting from the year 2023. And the next suggestion here that where possible, please actively participate in the policy making process via, you know, that you can raise your comments, suggestion, idea to the commercial chamber association if you have the chance to do that. Because if you don't raise your voice and new tax regulation is not in your favor, then it's too late to blame the government. And regardless of we are facing with COVID or non-COVID situation, please spend time for your tax planning activities. You know that it's very important when there's a number of tax changes like what happening there this year at the global level, regional level, and country level. So the third suggestion is be ready for the tax audits. You know that the government, they need tax revenue to run their operation. So the tax audit can be, the tax audit requirement may be reduced a bit during the lockdown period, but it will become the normal situation when government relax quarantine measure. So you know that the tax authority, they will have more pressure to collect tax revenue after the lockdown period. And if you are in the high risk tax area, like your company enjoying tax incentive, your company is seeking tax refund, your company is subject to report the transfer pricing, disclosure information to tax authority. Be aware of that and be prepared for that. If you are in the sector that luckily still have profit during lockdown period, let's say e-commerce, logistics, transportation, you also need to be prepared, because such kind of industry probably the priority industry that tax authority will come to see you first right after the lockdown period. And for tax audit, please be aware that you not only need to deal with tax authority to meet their expectation for the tax audit, you also need to work with top management, you need to work with other departments, you work with public media, you work with your consultant to manage the tax audit process go smoothly and effectively. So be aware of that and be prepared for that. Okay, and now I go to the tax updates. So there are quite a number of technical issues in my slide, so I may skip some of them. I just give you an overview, but not go into detail. So the first thing I list out, I think more than 10 important points for this update. So I will go quickly. The first thing I want to mention about the limitation on deductible interest expense. You know that if you have related, you have the borrowing from related party transaction, then both the interest expense from related party transaction and also the bank will subject to the cap. And for last year and this year, with the new decree 132, the cap on interest expense already increasing from 20% EBITDA to 30% EBITDA. Of course, last year and this year, the interest expense before subject to this cap, they allow to net off with interest income. And the rule from 2029 up to now, they say that the non-deductible interest expense exceeding 30% cap will be allowed to carry forward for 5-year time. How that part can be carried forward in another issue. So we will not touch on the technical point at this technical point at this time. For certain borrowing to build up the government infrastructure project, the loan, the ODA loan, this cap may not apply. The important thing that if the company in loss position, then interest expense, if you have the related party transaction loan and the loan from commercial bank, then interest expense may be not allow for deductible at all. And the question that the non-deductible interest expense can be carried forward for the 5-year time when the company in loss position is still a question at this moment. Ho Chi Minh City say that the interest expense not deducted, if company in loss position, interest expense not deducted this year can be deducted in the next 5-year time. But the latest response from the General Department of Taxation, GDT, they're saying that no, if company in loss position and interest expense cannot carry forward. So we need to follow up what is the final position from tax authority on that. The second thing is quite technical relating to the transfer pricing, but you know that the new decree 123, they saying that the range of profits or the price, the high price acceptable from the tax authority that it's not exposed to transfer pricing issue. For last year and this year, the range is narrowed down. So it means that the company needs either you need to sell things high price, buying with the low price, or you need to have higher profit last year and this year to be accepted, to be not challenged by the tax authority on the transfer pricing. You will asking the situation that why things like that, because the company hit by the COVID-19 significant in this month. Remember that this decree, the decree 123 issue in December last year, when Vietnam get a good recovery from the COVID-19 situation and achieved a good GDP growth rate last year. So whether the government will review again about that arm's length range or not is still a question, but remember that last year and this year, the transfer pricing requirement require hacker good profits situation from the company exposed to the transfer pricing reporting requirement. The third thing I want to mention that this year, the new rule that within the first 3 quarters, you have to pay at least 75% corporate tax for the whole year. You know that the old rule, they last year and the previous year, the old rule that you only need to pay 80% corporate tax after the 4th quarter. But now the new rule that after the first 3 quarters, you need to pay at least 75% corporate tax. If you don't pay at least 75% corporate tax for the whole year, then late interest expense will be applied. So take an example that if your fiscal year ended, your fiscal year and tax year it ended at, let's say your fiscal year and tax year follow the calendar year and ended by December, by 31st December. So let's say for the first 3 quarters, first 3 calendar quarters, means that September, you have 30 days to pay, under the Vietnam rule, you have 30 days to pay corporate tax for the first three quarter. So if, let's say, you don't, at the end of the year, if the tax department find out that you don't pay at least 75% corporate tax for the whole year, then the late interest expense, they will calculate it from the 31st October. Before the quarterly tax payment, they give you 30 days to pay. So from 31st October, they will calculate the late interest expense up to the time that you file the year-end tax return. That means 31st March of the following year. So the late interest expense will be high. That will be there's already a lot of reaction on that requirement, and the GDP, Ministry of Finance and GDP is saying that they will provide further guidance on that issue before October this year. So be aware of that, and be you need to follow up what's happening from the tax authority about this guiding. And during you know that pending the missing of the guidance at this moment, please do a calculation for the whole year, and also the calculation the tax you want to pay for the first 3 quarters to see whether you meet the 75% tax payment requirement. Of course, if you are in loss position and you don't have corporate tax to pay, and you don't need to worry much about that. But if the company, let's say a company in noodle instant, company in logistic industry, express delivery, you may need to take a look on that requirement, because that requirement will be applied starting from this year. Actually, there are lots of discussion whether the last year this will be applied, and the government agreed that they will move that requirement to this year. The next slide, I want to brief you about dependent units. The general rule in Vietnam, dependent unit, you have to pay VAT at the place you have sell activity, and you can pay corporate tax at the HQ. But if the dependent unit or dependent branches, you have manufacturing activity, and you need to allocate tax on that. So the government issued a new decree December last year, decree 126. They also changed certain rule on dependent units and dependent branches. So The case number one, for certain cases, even the brand or the unit registered as dependent, you still need to pay corporate tax at the brand. For example, if the brand is running the activity entitled to tax incentives, so corporate tax you need to declare and pay separately at that brand, even though that brand is dependent branch. The second point, that for certain activity, now you can centralize pay, you must centralize VAT and corporate tax at the HQ, even though the brand is dependent. The brand is dependent manufacturing brand, but if you are in the list of tax and centralization that I mentioned at point number 2, then VAT and CAT need to centralize to pay at the HQ. The rest will follow the rule. So because you know that the tax declaration for the dependent unit and brand will be changed. You know that with that changes, quite a number of companies, they need to change their you know that they need to change the finance policy, they need to change the accounting treatment, they need to change the ERP. So the government agreed that the changes on tax declaration and allocation to dependent branches will be delayed until next year. So this year things still the same, but next year you need to take a look on how the tax to be declared and to be allocated to dependent unit and brand. So I moved to new regulation about the business, the tax treatment on the business household and business individual. There are circular 14. It will replace some part of circular 92 about VAT and PIT, and that circular will take effect from next month, from 1st August this year. So it means that we have 1 week to go. So in circular they introduce 17 points that new and different with the circular 992. So I not go into detail about the tax treatment, but you know that now if you are the company, you make the payment to the business household and business individual. So now the quite a number of new rules, quite a number of tax rate to be applied, and most of the rules require that the company need to withhold the tax when you make the payment to the business household and business individual. So there's some confusing that, of course, in principle, the business household and business individual, they need to register their activity with the licensing authority and show you the certificate of their business registration for you to apply the new VAT and PIT treatment on that. But for certain cases, the business individual, by the current law, they are allowed to not to register their business activity with the licensing authority. So with that case, let's say if the company paying to the Grab driver or the B driver or the Gojek driver, what is the tax rate to be applied is still this filtering issue at this moment. We will send this presentation to you after the webinar, but I want to show you that that's the circular 40. They mentioned quite a number of new rate, VAT and PIT that the previous circular 92 not mentioned about that, and they also list down quite a number of activity that the company need to withhold the tax from the business household and business individual. So there are also a big question that if you cannot determine the individual, whether they are the business household, business individual, or just a normal individual without business registration, then whether the rate whether the rates mentioned in the circular will be applied on the rule that 10%, if you make a payment more than 2 million, 10% PIT will be applied on that. So my presentation, I show you about the new rate under that circular, but I not go into detail because it's more technical and more details. Okay, I go to the next point that now there are new refinement. You know that Decree 126 mentioned about the new requirement. If you are the corporate entity in Vietnam, you make a payment to foreign contractor, you need to withhold the tax. That is quite clear and still applicable now. But if now under the Decree 126, they saying that if you are individual and you make the payment to foreign supplier, let's say individual, you have some online commercial activity, you are buying advertising services from Facebook, from Google, you make the payment to them. Then the new rule now, they allow the tax authority contact commercial bank, contact the middle payment service provider, getting the information, and tax authority also can request the bank and the middle payment service provider to deduct the withholding tax from such payment and pay to tax authority. How they can deduct the tax, what rates applicable is still an issues, and I will mention about that by the end of my presentation. So the next point that I want to review about Circular 19. These circulars were issued in April this year. The government saying that in that circular, the government saying that they will keep reforming the infrastructure, and they will introduce more e-platform from this year until the following year. So let's say from tax authority, tax admin procedure, they will issue more e-platform like tax notice, decision to taxpayer will be using the e-platform. Some, you know, there's some channel to support the taxpayer. They also have, you know, the new platform. They will support by e-activity instead of you phone them, you go to see them. Now they have they will build up the portal that you can work with tax authority, go to the website. And for taxpayer, the tax authority said that they will continue reforming the current infrastructure and introduce more platform for taxpayer. You can see in the slide that tax registration, tax authority already have the online platform. Tax declaration, they have online platform. Tax payment, they already have online platform. But in future, tax clearance certificate, tax tracing, payment information, offsetting the tax overpay and late payment, tax penalty, they also put on the platform. Tax refund, tax exemption, tax relief, they also put on the platform. So quite a number of things. You can see that they identify 15 area government will put their activity on the e-platform to make sure that they will follow the trend of the global trend, and also to reduce as much as possible the contact between the taxpayer with the tax officer. For the tax value added provider, quite a number of you working with the service provider, they provide the e-invoicing solution to you. Then the provider also help. The government also introduced the platform that the tax value added network provider, they can connect to that platform and work with tax authority, and the other authority. There are also new portal to help them working with the tax authority. So Circular 19, they say that they will tax authority will introduce the mega portal. GDP also introduce the mega portal to connecting all of the system. I just mentioned in my previous slide. And Ministry of Finance also introduced the mega portal, the National Public Service Portal, connect with the tax authority. Other competent state agency, they also introduced the portal that they connect with Ministry of Finance and the GDP. The tax value-added network provider, they also connected to the first three portal, and the bank, the intermediary payment service provider, they also have the portal to connect with them. So the own five portal will connect together to provide the full income list solution to taxpayer, and also help the government to control the activity more effectively. So I move to the next point about donation for COVID prevention. You know that early this year government already issued a decree 44. They agree that the donation to help the government prevent the COVID-19 either in cash or in kind will be deductible, and the rule will be applied last year, this year, and probably next year. They require certain supporting document, invoicing, the written minutes between the donor and the donor organization, and they list down the donor organization. You can see it in the list. So you only can get your donation deductible if you donate to the right organization and you have the sufficient supporting document that listed in that decree. So I move to another point, that tax deferral. You know that similar last year, this year they also have the decree 52. They introduce 12 industry eligible for tax deferral. So I think quite a number of your activity may be fall under the 12 eligible industry at listed in my slide. So if last year, usually you can get the tax deferral last year, and this year, thing will be happen the same. So how long you can get the tax deferral? So for VAT, if you declare and pay tax on the monthly basis, then the payment obligation in March, April, May, and June, you can defer for 5 months. Tax payment for July and August, you can defer. Tax payment for July, you can defer for 4 months. Tax payment for August, you can defer for 3 months. If you are paying VAT on a quarterly basis, then first quarter and second quarter you can defer for 5 months. For corporate tax, the first quarter and second quarter corporate tax you can defer for 3 months, and for land rental you can defer for 5 months. So if you already get tax deferral last year, then the similar scheme will apply for this year. I move to the next point, that expand during the downtime. You know that during the downtime, during the lockdown periods or downtime, you incur the expenses for your people, for your staff, your employee, and you also have the depreciation of fixed assets. And during the tax audit recently, there are also questions from the tax authority that whether the wages, the salary, the wages you pay to your employee during the lockdown time, when the company have no operation or very limited operation, can be deductible, and depreciation of your fixed assets when your operation is almost locked down or no operation. So can we claim deductible spend or not? And I list some tax ruling here to help you to overcome these challenges from tax authority. So there are quite a number of tax ruling. They say that during the lockdown period, the wage salary paid to your employee during the social distance or suspension still can be accepted at deductible spend. For fixed assets, if the operation is not suspended for more than 9 months, it means that within 9-month periods, tax authorities still can be accepted. Depreciation expense can be deductible. But that's a general rule. When you apply into particular situation, please make sure that you find out on the facts, and you may need to contact your consultant to discuss about the treatment if you subject to the tax audit. So discuss with your consultant about that. I also have a point that mentioned a point that some pandemic-related expense for your employees. So the purchase of masks, the face mask, the hand sanitizer, protective accessory, the testing kits by the deductible. So quite a number of tax ruling they accept that deductible, but should not exceeding one average month of salary of the whole corporate salary. You know that you have the total salary for your company, you divided to 12 months. So such kind of expenses cannot deductible, but they limit to 1 month average salary for the whole company. And the second question, the cost of salary and wages of the expired from the end of quarantine periods, but before the time they getting the work permit, so the salary expense during that time can be deductible or not. And by a number of ruling they say no. If the expat during the time expat put in the quarantine hotel, the expense can be deductible. But after they finish the quarantine hotel, but they during the time they apply the work permit and they not receive the work permit yet, then expense is not deductible. And the last thing that expense for let's say expense for employee, if you have some employee because they are considered that F0 or F1, and they are put in they are required by the government to go into the quarantine place, so the expense relevant to them, if you have supporting documents, can be deductible. I have a few more slides to complete my presentation. This one about the residency status change. You know that in Vietnam, for the employment income, if you are the resident, you have to declare the worldwide income of your employment income. You need to declare the worldwide employment income, and you have to pay 5 to 35% of progressive tax rate. If you are non-resident, you only need to declare Vietnam source income, and you pay the flat rate at 20%. And during the COVID-19 period, the situation that some of expats go overseas and cannot come back to Vietnam, so their residency status change from resident to non-resident. Some expats or some people coming to Vietnam and cannot fly out, so you expect that you can go out of Vietnam so quickly, but because no fly, you cannot go, so you need to stay here. So you become you know that firstly you thought that you are non-resident, but you become the resident. And the time that you need to the time that you stay in the quarantine place also counted to work out that whether you are resident or non-tax resident. So be aware of that. And if the tax the residency status change, please make sure that you also change the way the tax base. You need to change whether you need to declare Vietnam source income or worldwide income. You also need to change the applicable tax rates, 20% or progressive tax rate, or vice versa. Okay, the last one, you know that in the last couple of months, Ministry of Finance already drafting a circular to tax the overseas supplier. That's you know that in the whole world, people you know that talking about that how to tax the big tax company like Facebook, Google, TikTok, Amazon, and you know that. So Vietnam is not an exception. The government also have drafting that circular, and they call that the overseas supplier, and they will tax them, and they will tax them quite similar with the mechanism with the foreign contractor tax mechanism. They will tax them, and how they can tax them, they will based on 3 criteria. They will will see where the payment come from. If the payment information come from Vietnam, and the residency status of the paper also based in Vietnam, and the access location, the IP also based on Vietnam. So based on that three criteria, they will work out, they will make a decision that the overseas supplier will derive income in Vietnam and subject to tax in Vietnam. So they have quite a number of mechanisms. Of course, they recommend for the overseas supplier to contact tax authority to register and pay tax. If not, then if the payer, either corporate payer, then the similar mechanism like foreign contractor tax will apply. The corporate payer will withhold, declare, and pay the tax on behalf of overseas supplier. But if the payer individual, then they will ask the commercial bank or the middle payment service provider to withhold, to deduct, to withhold the tax from the payment. If the payment, you know that if the individual using credit card or the debit card to make the payment go to the bank, and the bank can reporting that information to tax authority, and in the next transaction, the tax authority can request the bank and the middle payment provider to declare the tax. Okay, so I try to go through quite a number of the new updates, and you know that because the time is limited, so I try to brief you the key point.